I'm often asked, which should we prepare for, inflation or deflation? I'm speaking in March 2010, and the answer is inflation. Why is that? Well, you get what you want at the end of the day if you're in government and if your government's acting together. And let's be quite clear that governments don't want deflation. They do not want a world where the price of your house is getting less by 5% every single year for the next decade. They can't imagine any worse nightmare than that. It would bankrupt the entire nation. So they want inflation. They want to keep on the safe side. If you target a zero inflation rate, then the moment you have a small blip, you go into deflation. It could be argued that we've been foolish trying to target an inflation rate in the UK and many other nations of around 2 to 3%. Because in history, we see that inflation rates can blip up or down as a result of some kind of major crisis. It could be war, it could be, I don't know, a major uncertainty in the market, a collapse like the subprime crisis. All kinds of things can cause changes in inflation or deflation. So that means that we need probably to think about a target which is higher than 2 to 3%, because what happened was, the moment we had deflationary forces bringing the inflation rate down from 2% down to 1%, or lower than that, perilously close to zero, or even into slightly negative territory, panic broke out. If we'd had an inflation rate of 5, 6 or 7%, we would not have been worried about inflation falling to 2%. We probably would have been rather relieved. And we'd have been a bit more relaxed about some of the stimulus packages that we had to put into place. So you can expect to see, as I say, quite a long-term discussion about chasing a slightly higher inflation rate. Now, what that means is this, that even if people like the UK government continue to say publicly that they're chasing a 2 to 3% inflation rate, in practice, they will be quite relaxed if the inflation rate tips up to 3, 3.5%, 4, 4.5%, which is what's been happening at the moment. Because the last thing they'll want to do is to withdraw fiscal stimulus too quickly and then go back to deflationary risks again. So that's just one reason why, on balance, I would say that the likelihood of the inflation rate increasing is much greater than the likelihood of it falling. Now, there are other forces at play, not least of all the fiscal stimulus itself. Much of this $3 trillion that was poured in by various governments into stimulating their national economies is likely to play out as the economies are recovering, unfortunately. Let's take President Obama's famous funding of high-speed travel. You can't build a rail link in 18 months. In fact, much of his money will only be spent in the next 5 to 6 or 7 or 8 years. That is likely to be at a very time when the government is seeing its own inflation rate creep up. So what does it do? Cancel the rail project? I doubt it. So we'll see inflationary forces continuing to inflate at a time when inflation is already rising. That's for sure. No one really knows the full impact of all of these fiscal stimuluses when they're put together. And no one really knows what the inflationary cycle is likely to be and how long it will last. But again, the other fundamental fact is this: it will be a cycle. And if inflation does creep up to 5 or 6%, and if the bank rate creeps up accordingly, and if we do get into, for a very short period, higher inflation than that, then we then face the risk of a further downturn, and so it continues. I mean, business cycles have always been with us. The only debate is how slow and long they are, or how fast and short. So my own view, as we look out from 2010, is that we will see the global economy recover. I think quite strongly through 2011. We will see inflationary pressures. We will see a mini boom, maybe even a sustained boom, as all that pent-up capacity starts to find its own purpose in producing things that people want and can once again afford to buy. We will see the emerging economies continue to romp ahead. They have never really stopped. Their own economies' growth rates, in the case of China, has fallen only marginally through the entire process. Many African nations were relatively untouched by the global crisis. So when you put all these things together, I think we'll see some months, maybe a year or two, of rising inflation, with, as I say, rapidly rising production, followed by rising interest rates, followed by great pressures, followed by another crisis. You see, after a major convulsion, it's hard to see ourselves coming back gradually to an optimum stable level. It's much more likely that we will overshoot, as I say, and go into a series of cycles which will gradually, hopefully, settle down again. So watch this space. On the upturn, at the peak, in the downturn, at the trough, at every point in every business cycle, there are always great opportunities. If you are agile, imaginative, and you have cash.